LKAS 8 is about accounting policies, estimates, and errors. Three areas. So the objective of this chapter is how to treat for the changes in accounting policies, and changes in accounting estimates and error corrections. Three areas, right? So here also we have some important definitions. So we need to know what is meant by accounting policies, what is meant by estimates, and what are the materiality, what is meant by material, and what are the errors, prior period errors, right? And there are two more important points. One is retrospective application, and the other one is prospective application, and also retrospective restatement. So these are the areas, right? What I will do is I'll explain this from a mind map or a summary. So look at this. If you can write this, it's better. I have summarized. I have taken the important points into this. I can draw this. LKAS 8. Right? Accounting policies, changes in accounting estimates and errors. Better if you all can draw this. This has three parts: accounting policies, accounting estimates, errors. So what is meant by a policy? Accounting policy means these are specific principles, bases, conventions, rules and practices adopted by a business in preparing financial statements. Right? These are the rules, practices, conventions, accounting principles. Remember the examples like depreciation policy, inventory policy. Right? A change in the accounting policy. Right? If we are changing the accounting policy, we have to use the retrospective application. So I'll explain what is meant by retrospective application. Retrospective application means you will change the previous year, current year, and future accounts. Previous, current, future accounts. You have to change the past, present, and future. Everything. Right. We don't take this here. The main example we take is inventory policy. Let's say we were using first in, first out method. Right? We were using first in, first out method. First 2 years, first in, first out. The third year, you think first in, first out method is not suitable. You have to use the weighted average cost method. Then you have to follow retrospective application. You have to apply the new policy as it has been already adapted. Like you have to change previous year, current year, and all future years. But when there is a change in accounting estimate, it's only prospective application. So what is mean by estimate? Estimate means the adjustments for the carrying value of an asset or a liability. It's adjustment like useful life of an asset, warranty estimate, NRV calculation. These are examples for estimates. So when there is a change in estimate, you don't change the previous year. You will change only current year and future records. Current records and future records. For an example, let's say there is a motor vehicle, cost is 100,000. Initially, you thought the useful life is 4 years. So first year you depreciate 25. Second year also you depreciate 25. In second year, you think that useful life is not 4 years, useful life is 6 years. Then you don't change the first 2-year depreciation. That will be recorded as it is. Then what you do? You see what is the remaining cost. Remaining value is 50,000, remaining book value. That will be divided by the remaining useful life of 4 years. So already 2 years gone, another 4 years remaining. So remaining book value can be used only for another 4 years. So from the third year onwards, you depreciate 12.5 each. So this is called prospective application. Prospective application, prospective application. And when there is an error, error means omissions or misstatement in the prior period. That also should be retrospective application. You have to change the previous year. And when you change the previous year, you have to restate the financial statements. So we call it retrospective restatement. Changing the previous year financial statement. So there is a question, there is a doubt. To explain the, I think the depreciation, right? Okay, let me explain that. This, let's say there is a motor vehicle, cost is 100,000. And we are planning to use the motor vehicle for 4 years. So after using for 2 years, there is an adjustment for accounting estimate. Useful life of the asset increased by another 2 years. So total useful life become 6 years. After 2 years only, you change the useful lifetime. So first 2 years, the depreciation will be 100 divided by 4, which is 25. 25, 25. And third year, if the useful life increased by another 2 years, then the remaining useful life will be 4 years. So third year onwards, we have to depreciate for 6 years of the useful lifetime. So already 2 years gone. So you don't change, you don't go back and change previous financial statement. The change will be adapted from the current financial year. So remaining book value is 50. Out of 100, already 50 is depreciated. Remaining 50 can be used for another 4 years. So answer is 12.5. So remaining 4 years, motor vehicle will be depreciated 12,500. First 2 years 25, 25. Remaining 4 years, 12.5 each. So this is the basic that you need to know under LKS 8. Any questions? Right. So today we were able to discuss two standards, LKS 2 and LKS